I'm Charlotte McLeod with the Investing News Network, and here today with me is Mercenary Geologist Mickey Fulp. Thank you so much for coming. Great to see you again in person.
Likewise, Charlotte.
Okay, so we're here at the New Orleans Investment Conference. We're checking in after our last conversation back in May at BRIC. So you were very bearish back then. I remember you were selling most of your junior resource stocks. I wonder if you are still feeling the same.
Yeah, I don't think anything's changed.
Yeah.
And I wasn't selling most of my junior
okay.
stock. I was slowly selling things as opportunity presents. So if I could take profits from some holdings, I would. If things had been down for a while and they came back to break even, I'd take money off there. And then the plan was any profits I made, I'll wipe them out at the end of the year with the dog's breakfast of casserole breakfast of juniors who have no hope of ever recovering. So the idea being come out of the year, break even, don't own any capital gains stocks.
Okay. Thanks for clarifying that. I think that makes a lot of sense. So how do you decide on your strategy? Because, here at this event, people are looking for what to do with their money. I've heard a lot of different opinions on whether this is a time to buy or not, because you always hear that you should buy low, right? And it's pretty low. So how have you decided on
Well,
that
I
strategy?
think you buy low when you see some idea that the end is in sight for a bear market.
Yeah.
Otherwise, you might buy low and have to buy lower as stocks go lower. So, there's an old saying, Bill King said it. He's a newsletter writer out of Chicago. He says more money is lost averaging down in a bear market than at any other time. So you got to be really careful about what you're doing there. But if you're going to buy, I think you need a strategy of stocks that are closely held, tight share structures, where management's got a lot of skin in the game, and they have good projects. And I would dare say that in this current environment, you ought to be protecting your market, protecting your capital, because right now, if you announce, with few exceptions, you announce good drill results, it becomes a liquidity event and a selling opportunity for even people like me who are waiting for things to happen to take money off the table. So I don't, pardon me, I don't think anything has changed in my outlook. I see no end in this bear market. I don't see the catalyst that will create an end to it unless gold goes to the roof again. We establish a new all-time high or close to it for gold. And we'll see.
We'll see. And that must be tricky for the companies, right? So one of the topics that I've been talking about as well is, what are they supposed to do in this environment? Do they sit by and just do nothing and save their cash, or do they try to put out news in this environment where maybe people just take that, as you said, as a selling opportunity?
Yeah. Well, I don't have any answers for that.
Okay.
Maybe it's one of the reasons I've never chosen to run a company.
There you go.
That's a tough row to hoe. So, so I hear all different sorts of stories on the floor here about strategies, and preserving your capital at times like this is probably not a bad thing to do, because people have G&A and they can blow a lot of money on G&A too, especially in bad markets. Seem to be able to do that. There's lots of companies here, and we have a very bear market, and you're wondering, well, they're here. It costs money to come here, but it's a tough choice, because if you don't get out and let people still know you're around and at least semi-active, then you kind of lose your audience too.
Oh, that's
Bear
true.
markets are hard.
Yeah, it's true. And I also would never choose to run a company. It sounds much too difficult. So one of the things that we talked about last time, we're talking about, commodities prices, they may be the problem somewhat, but other issues are afield as well. Like we talked about the green agenda, we talked about resource nationalism. Those things are going to continue being an issue.
ESG.
Exactly. So I wonder though, those things are going to stick with us. So what would prompt you, I guess, to come back in the market? Because even if we make it through this bad patch, we're still going to have all of those other types of things still there, right? So that's tricky too.
Yeah, well, it is tricky, and you know, I've been doing this a long time.
Yeah.
Um, Speculating junior resource space for 30 years, and so I've seen good markets, bad markets, in between markets. Um, the thing going on right now is uh, there's really, I see no end in sight for the junior bear market. But if commodity prices increase again and we hit record commodity prices, then we'll start to have a gain. We should. And it's going to be driven by gold. Gold drives the Toronto Venture Exchange, always has, and I don't see that changing.
Right. And so you mentioned tax loss selling coming up. So I wondered if you could go into that a little bit for investors. Any strategies they might want to consider there if that's something maybe they haven't done before. Do you think it's going to be a big year on that end?
Oh, I think it's once again it's going to be huge for tax loss selling because this market. Let's just look at the Venture Exchange Index. It closed the year at 939, December 31st of 21, and I haven't seen the last couple of days. It's somewhere around 620 right now, so it's lost 35% of its value, and that's kind of a proxy for the junior resource sector as a whole, although it does contain, it's only about 40% juniors, but, or junior mining, junior resource stock. Um, but so there will be massive tax loss selling. Normally this time of year, I start preparing a tax loss buying contrarian idea of things that gotten really beaten down that I would want to buy, and I haven't done that yet. I'll probably do that. It didn't pan out at all last year because I bought a bunch of really upper level juniors, most of them New York American Exchange listed, thinking they get beaten down, they'd come back after the first year and never came back. In fact, they went down, and they reflect the general thing of what's going on in the major U.S. markets, where on Nasdaq's lost 30 to 35%, depending on trading days. S&P 500 mid 20s, the Dow about 20%. So this is a North American wide bear market, and in some instances it's the same worldwide. So we'll see what comes out of that. We've got major macroeconomic problems worldwide. I think there's no doubt the world's in a recession. Generally, metals prices go down during recessions, and they have. So we've got to come out of the recession, and there's a way for that to happen. And number one start would be rising interest rates, and that's happening worldwide. At least in the U.S., you've got to reduce the money supply. That's really not happening right now. You've got to cut taxes. That's not happening right now. And you've got to reduce all this deficit spending. So, and that probably segues into something you told me you're going to ask next, and that's the U.S. elections.
Yeah, we're in an election year, midterms coming up. So I did want to get your take on what that, what are you expecting from that? What can we expect to see, and how might it impact the markets?
Well, I think it's pretty well established that the U.S. Congress, the House of Representatives, will result in Republican control, which is not the case right now. Uh, the Senate is probably a toss-up whether the Democrats keep the Senate. It's 50-50 right now, but the deciding vote is the world salad wizard, Kamala Harris, and so she casts the deciding vote time and time again, where you get these 50-50 splits. We'll see what happens there. But at worst, I think what we can expect is gridlock. And gridlock is good in the U.S. because they can pass less laws, they can spend less money, they can't really raise taxes because the opposition party is going to kill it. Um, so I'm pretty optimistic in the fact that we're going to at least end up with gridlock in the U.S., which will help calm some of this green agenda, tax and spend, and ESG platforms of the Democrats. Uh, it's not going to roll back regulations. It's not going to get approval for development projects of any kind. Uh, and so then it reverts to kind of what we have with 8 years of, or the last 6 years of the Obama administration.
Right.
Gridlock.
Right.
Gridlock's not bad. We don't, my opinion, we don't need more laws and regulations. It's counterproductive for a free market economy.
Okay, and another point I wanted to follow up on from our last conversation. So we talked about what you were bullish on, which was physical gold and farmland.
Right.
And I think that hopefully we all understand physical gold at this point. Hopefully we know how to get our hands on that if we want. Farmland was an interesting one. So, I think that when we aired that interview, people were like, okay, so how do I do this? So farmland, how do you address that if you're an investor and you
Well, you go look someplace where there's farms and there's land for sale, and
you just go for it.
And you know, you make a decision that you want to own this tract of land, or it's no different than buying a house or buying, you know, industrial space or whatever. You're just buying something that hopefully is productive, and whether you farm it or not, there's lots of farmers that are looking to lease land for farming. So, um, historically, since the Renaissance, the world's richest families have owned three things: physical gold, farmland, and fine art. Fine art's somewhat speculative because you got to find a buyer uh, to be interested in whatever you've held, but fine art has retained its value. Farmland does because it's productive. We all need to eat, and gold's money, so.
Yeah, no, fair enough. Okay, that's all I've got for you, unless you have any final words of advice for people.
I've probably been pretty bearish, but that's the current market. I don't quite see it ending, but it will end. Bear market cycles come and they go. So at some point, shy of world economic collapse, uh, we'll have a bull market again. Even if we have a world economic collapse, uh, then when we recover from that, we'll have the best bull market ever. So.
Okay. And we'll end on that note. Thank you so much for coming by to talk again. Always great to see you.
Likewise, Charlotte. Thank you.
And once again, I'm Charlotte McLeod with the Investing News Network, and this is Mercenary Geologist Mickey Fulp.